September 16, 1992. On this one day, one man makes over $1 billion. A government loses complete control of its currency, and the British pound collapses under a pressure that wasn't from a war. Not from a recession, but from a single trader with a bet so enormous it shook the foundations of Europe. This is the incredible story of the day George Soros broke the Bank of England. Let's rewind to the early 1990s. Britain has joined something called the ERM, the exchange rate mechanism. Think of it as a waiting room for the euro. The idea was to keep all the major European currencies stable against each other. For Britain, the rules were strict. The British pound had to stay at a fixed exchange rate. It absolutely could not fall below a certain price, and the Bank of England had a duty to defend it, no matter the cost. On paper, it sounds simple enough, a way to create financial harmony. But there was a huge problem hiding in plain sight. Britain joined the system too late, and more importantly, at the wrong rate. The pound was fundamentally overvalued. The British economy was struggling through a recession, and interest rates were already painfully high for ordinary people and businesses. To defend this artificially strong pound, the government had only two terrible options. First, they could raise interest rates even higher. This would attract foreign money, sure, but it would also crush businesses and homeowners back in Britain. The second option was to use the country's national reserves, billions of dollars, Deutschmarks, and other currencies to buy up pounds on the open market, propping up its price. Either way, Britain was bleeding money and political capital just to stick to the rules. And one man, watching from afar, noticed this weakness. Enter George Soros, a Hungarian-American investor famous for his razor-sharp instincts, running a hedge fund called the Quantum Fund. Soros didn't just look at charts. He studied currencies like a general studying a battlefield. He analyzed Britain's situation and came to a simple, powerful conclusion. The pound was too expensive. He believed Britain couldn't keep defending it forever. Sooner or later, the pound had to be devalued. And with that conviction, Soros placed one of the largest, most audacious short positions in financial history. He borrowed tens of billions of pounds that he didn't own, and immediately sold them on the foreign exchange market. His plan was brutally simple. Sell high now, and when the pound inevitably crashed, buy it all back at a much lower price, and keep the massive difference. But Soros wasn't just betting on failure. He was actively accelerating it. His massive sale sent a signal to the entire world. When a trader of his stature makes a move that big, other investors pay attention. Soon, hedge funds, banks, and speculators from all over the globe followed his lead, all betting against Britain. This wasn't just a trade anymore. This was a coordinated financial assault. This was war. The full-scale attack begins on September 16, 1992, a day that would go down in history as Black Wednesday. A tidal wave of selling hits the market. Billions upon billions of pounds are dumped, driving the price down. The Bank of England, bound by its duty, fights back with everything it has. It starts spending its precious foreign reserves, buying up pounds to support the price. The government makes a desperate announcement. They're hiking interest rates, effective immediately, from an already high 10% all the way up to 12%. The message was clear. We will do whatever it takes. They even threatened to raise rates to a catastrophic 15% later in the day. But the market doesn't even flinch. Soros and the other sellers just absorb the pressure. For every pound the Bank of England buys, Soros and his allies sell even more. Every desperate announcement from the government is seen not as a sign of strength, but as a sign of panic, encouraging investors to attack even harder. The Bank of England was like a single person trying to stop a tsunami with a few sandbags. The force against them was simply too overwhelming. By the evening of that fateful day, the reality becomes undeniable. Britain has burned through over $27 billion worth of its foreign reserves in a matter of hours, trying to defend the currency, and it did nothing. The pound was still under immense pressure. The government finally admits defeat. In a humiliating public statement, they announce that the UK is officially withdrawing from the exchange rate mechanism. The pound is now free to fall to its natural level. All the painful interest rate hikes are immediately reversed. The moment the announcement is made, the pound collapses in value overnight. For the UK, it was a national embarrassment. The government lost immense credibility. The entire project of European integration took a major blow. And George Soros, he became a financial legend. Let's look at the final scoreboard. On one side, George Soros and his quantum fund walk away with a profit of over $1 billion in a single day. On the other side, the UK government officially loses around £3.3 billion, though the real economic damage was likely far greater. The British public was left to deal with higher inflation and a much weaker currency. And for the European Union project, the dream of a single currency was delayed, with the euro eventually launching in 1999. This wasn't just a financial event, it was a geopolitical earthquake. Soros didn't just break a bank, he broke an entire system. So, why did Soros win? Was he just lucky? Not at all. He won because the rules of the game themselves were fundamentally flawed. Britain was committed to keeping its currency strong while its underlying economy was weak. It's like promising the world you can run a marathon when you have a broken leg. Sooner or later, reality catches up. The market didn't attack Britain unfairly. It simply exposed a truth the government was trying to hide. The legacy of Black Wednesday changed the course of modern history. Britain became far more skeptical of Europe, an attitude that would ultimately contribute to Brexit decades later. The idea of a single European currency lost some of its unstoppable momentum, and in the UK, the disaster eventually led to a major policy shift. The Bank of England was granted independence from the government to set interest rates, a move designed to prevent political pressures from creating another economic catastrophe. Soros would forever be known as the man who broke the Bank of England. But the real lesson is far bigger than one man or one trade. It's that no country, no matter how proud or powerful, can fight the fundamental forces of the market forever. In the end, a single man made $1 billion, a government lost a fortune, and the world learned a powerful lesson. Currencies aren't protected by borders or by politicians' promises. They are protected by belief. And when that belief dies, the money always follows. Thanks for watching. If you found this story as fascinating as I did, make sure to hit that subscribe button for more deep dives into the events that shaped our world. See you in the next one.